Hi folks, Scott here, and this is the wrap for Wednesday, October 9th. Pretty much what we expected and what I think I mentioned in last night's video. After a big trend day like we had, which was the widest spread day or the widest range day of the past 7, we put in a consolidation day. The markets are still going live here with about 10 minutes before the cash close. But you can see we probed to the downside, it got rejected quickly. We probed to the upside, there was some support on my trading room charts. Right at it, in fact it's not from a trading room, it's the daily pivot, and it's from our price guides. If you look up the daily pivot regular trading hours, and the market is closed, and we may end up with a doji going into tomorrow. Regardless, one thing I know for sure is that today put in a new 20-day low. Look at the daily chart, cash index there, or the futures chart. What's the low of today? You can't see it, but the wick went way through that unfilled gap. So that unfilled gap was filled and broken that trend line. We'll see if we melt down and test this 1620 area and possibly 1600. Regardless, going into tomorrow, what I want to show you the results are for fading gaps historically after a 20-day low. That's the only consideration. 20-day low, and above a 200-day moving average. So independent of whether we actually put in a 20-day low close or not, just simply a 20-day low. And let me show what Gap Trader shows the results for. Hold on, here we go. Okay. Couple things stand out, several things stand out actually, and you should be picking up these now if you've been listening to me for a while. One, it's happened a lot, so it's a statistically relevant number, but on the surface it doesn't look like it's any big deal, just a standard old gap trade. And this is using an end of day stop, but as some famous cartoon character said, I think, au contraire mon frère. Look at the difference when you look at the long gaps versus the short gaps. 2-to-1 odds of gapping up following such a pattern as this. More importantly, a down gap is almost a no-brainer to fade with even a speculative position in an end of day stop. Now, that's not my style, but it's never sold off more than and closed more than 13 points down. That's a lot, more than I want. But look at that, 83% win rate, made 4 times more than it's lost. Going long, holding till the end of the day after a 20-day low above the 20-day low close. So this is even when I rerun these numbers for our members in the morning using our MTG stop parameters, it's going to show some impressive numbers, almost guaranteed, when they're this lopsided. I'm pretty confident saying that. However, a gap up is actually pretty darn weak. Using an end of day stop, it's almost 10 percentage points weaker than the average gap fill setup and has lost some money. So when you apply our MTG stop parameters, which are simply volatility adjusted stops equal to 30% of the 5-day ATR, it's going to have a low win rate and probably be a comparable loser or more. So going into tomorrow, I have a long bias based upon this one specific pattern. I had a question in the trading room today. Somebody says, I was really basically implying they were confused by my video wrap, which made it sound like there's no way I would go short today on a gap fill, because last night's wrap showed the risk for shorting an up gap. But I was clear. If you go back and listen, I said at the very end, I said, doesn't mean that there's no way I would fade an up gap. It just means there's no way I'd fade it with a full position size. I'd reduce my position size, which is what I ended up doing. That's a good segue to talk about today's winning gap fade. So just one piece of data, but it's a good place to start getting your head around what you may want to do in the morning. So let's look at what we had. We had small gaps up, and I'll show you in just a second. I'm going to show you the worksheet first, which is the synopsis of the 8 individual gap guides. That's where I always start my analysis, because it tells you at a glance, is this a tradable scenario? And at a glance, when you see, well, what you see here is that any gap up in the opening area between the prior highs and the close, on average, has been right at my minimum criteria, only a tad below it. I'm looking for 60% win rate and a 1.3 prop factor. So it's right at it. That's pretty darn good, averaging all 8 indices. So I was definitely intrigued. There were no unique day factors I had to worry about, and only one unique pattern from our database. That's after a widespread 7-day. The widest day of the past 7, when below a 10, above a 200-day moving average, has been dead neutral. See that? Now, one other thing to note, was not able to get long. I went long. I don't think I talked about it in last night's video, but caught a nice overnight trade to the based upon the worksheet the prior night. Last night was set up even better, and I missed it. And let me show you why. What I mean by that is what this column is here for. It's very helpful, and you see 62% of these 5,000 plus trades, which come from the 3 systems applied to the 8 indices that we use. 62% of the time the market's gapped up. When you see numbers that high across all those 8 indices, you can add 10-20% to it easily, and that's the odds of gapping up. And that's what we had today. And I wanted to get long, but the market rallied early last night and never pulled back. I was trying to get filled in a pullback to the gap fill areas. So did not catch the overnight trade, which some of you did. Congrats. Yeah, let me look. I'll show you the individual guides here, because there were a couple zones in play. This number is actually even better than you may realize. Go back to the home page and the gap guides. So we were opening between the open and the close. That's the DOC zone. If you look over here today, well, that number's about the same for the ES, 67 and 1.26. Weighted average of my 3 systems. So give it a half a check. YM, half a check, same thing. NASDAQ definitely meets my criteria. Russell definitely meets my criteria. Looking at the ETFs, Spider definitely met my criteria. That was better. And Diamonds met it, even though narrowly. So now I have 4 of the 6 meeting my criteria, and 2 that were near misses, a 3rd near miss, and then a 4th one that hits it. So basically, everything either met my criteria or narrowly missed it, looked attractive. So you can virtually guarantee I'm trading it, even with risky data like I showed yesterday in last night's wrap. So here's how I summed it all up in my comments, posted 9:22 a.m., 9:23 a.m. today. Last night's video, there's the data point. 13 of 26 wins for a very specific, highly nuanced, small sample size scenario, but still very specific. I'm always going to respect that. It showed some concerns, and there were other factors. This isn't showing every single thing that I look at. There's no way to do that, but I try to be representative. And sure enough, there were certainly some risk factors showing we could bounce and have an inside day, and that's what I said down here. Guides were overall pretty attractive. Mixed or weak data though for fading up gaps. And inside day meaning we may not even fill the gap. You just trade inside of the day's range. Fortunately, that didn't happen, because I said it does meet my criteria for trading, so I will short with a 6-point stop that's slightly bigger than what our guides show. But I don't mention what stop I'm using. I'm generally using what the guides show. But I did something pretty different. I've been doing this a little bit more of late, so I don't do it real often, maybe 1 out of every 4 or 5 trades. But if that, 1 out of 10 trades. I entered, my plan was it was only really worth trading with a 1/3 to a half size position with these risk factors for me. In fact, the last night's video I said a half would be the most I would do. So I knew though that if it routed a little bit, it would change the dynamic of the trade. So I decided to go 1/3 at the open. I didn't say that at the open, but all of my comments are generally assuming I'm entering right at the open. That's what I always do. Go back and listen to my videos and you'll hear that. But I would add to it, double the position. I'd take it up to 2/3 position if it went up to 1656. And with a 6-point stop, I was going to be way out of harm's way and be in a position to capture a 6-point win. So that was definitely worth trading, because this was the Cowboy setup. Cowboys will buck around and they look like they're going to rally, but they just sort of fall apart. In fact, that's what we did at the end of the day, right? So I went short at the open, hoping we'd rally a couple points. That'd get my stop way up here, well beyond the midpoint of yesterday's range, way up higher in the range, beyond the afternoon highs, just out of harm's way, beyond some confluence areas, more than 2 points beyond the Globex level, and so on. But it didn't rally. So regretfully, I made 3 points in less than 15 minutes, which is okay, right? Actually, the way it turned out, I was filled with a positive tick of slippage at the open, 1653. That's what happens when, with a market order, positive slippage. Yes, it does happen. more than you might think when you fade the gap, because you're going counter to the prevailing overnight move. I took off half at 49.75 for 3.25 points. My plan was a correction. I took off 2/3. My plan was to hold the last third for 16.47, which was roughly the extended target area. And we paused just a little bit too long, long enough for the 15-minute range guys to come out. The pink lights here, they favored a bounce for the low fade, and that was enough for me just to close the whole position down and take my profits. Of course, it sold off immediately right after I took my profits at 49.50, and it went down to 47, cost me an extra 2.5 points. Quite a few members caught 6 points on this. I think some of them entered a little bit earlier than the cash opened, so good for you. That wasn't me today. The high fade was favored, and we did test correction. We did not quite get to the high fade, went to the open. So I don't know if you got in the field. I was going to pass on, wasn't quite strong enough. Markets, it gets stretched to the downside and poised to get a little bit of a short covering rally. Instead, it rolled down and tanked. And we showed some data that I had on closing odds today, favored a positive close, and it looks like we'll be right at it today. So we were able to get a rally going to the day. I didn't do any other trades. I just took my gap trade and called it a day. So there you go. That was my day, and that is the wrap for Wednesday, October 9th. Have a good one.